Welcome to Momentum Monday. Today is July 24th, 2022. Howard, what's new?
What is new? I'm enjoying my time. I see my little miniature dachshund. I've put my dog away so she doesn't interrupt our show. I have a little remnant of her there, fake dog in the corner there. What is going on? It has just been spectacular here in San Diego, as you know. I mean, I am working, and another thing I have to do other than work is train for this September holiday that I've been planning, another big bike ride. So I'm trying to get myself in shape. Tomorrow I'm doing Palomar, which is 12 miles straight up.
Yeah,
You've been up to volleyball? What have you been up to, buddy?
Yeah, basically the same, yeah.
You're enjoying
Just enjoying the summer, yeah. The summer here is definitely beautiful compared to many other places. This
my
year.
coffee store here on the island. I'm an investor in Trident. It's great coffee. Have you been playing volleyball?
Yeah.
I'm gonna do. I mean, you should do this with me. Right over the bridge, August 28th.
Maybe.
I've always missed it, and I'm excited to take my bike over the bridge. I've never been able to drive over the bridge.
Yeah, good idea.
What do we do on the show? Oh yeah, we talk about the markets.
Yeah, I mean, last week was, I would say, pretty interesting. As in the middle of the week, we saw 3 days of back-to-back rally in the indices and in most stocks. And then Monday and Friday were sell-offs. So to me, that's just a typical bear market rally, bear market price action. There's still very few stocks near 52-week highs and even above their 50-day and 200-day moving averages they're setting up. A lot of the breakouts are really not following through, but if you're buying dips like in strong stocks to their like rising 20-day moving average, that has been working a lot better. From a swing trading perspective. But other than that, still bear market action. It will be interesting to see next week when the indices potentially test their 50 and 20-day moving average, if they're going to bounce, because this might be just a bear market rally, but bear market rally can last a few weeks. You can potentially test the 200-day eventually. And next week is a big one since we have the FOMC on Wednesday. I think currently the market has priced in 75 basis points increase. And if it's less or more than that, that'll probably have some implications. It will be a surprise, I think, if it's less or more than 75. Yeah. And then you have all the big tech companies report earnings, Apple, Amazon, Google, Microsoft, all the big ones.
Microsoft, Visa, Chipotle, Boeing,
Exxon. Yeah, I mean, there are a lot of big
Shopify, Qualcomm,
a lot of big companies, and
Roku, Amazon. Yeah, so this is the week. I'm gonna just watch this week. I tell you what, I am super bearish. I'm too bearish to be involved in the market. And again, I'm like optimistic, so I'm not bearish, but I mean, I don't see it other than the sentiment. I'm looking at two things out of it. I'm like, shit, like if I want to own Apple at this point, I'll just buy Berkshire Hathaway because he's going to buy the dips. But like, what's the valuation? Let's go out on a monthly here on Apple.
Apple is 2.5. Yeah.
So let's look at Apple, right? Like it's not even a blip compared to the bear market. Like if we pull up the QQQ versus Apple, you can see like we've got a real problem here in the country in that everybody, and by everybody I mean indexes and Warren Buffett are hiding out in Apple. So you have this incredible dichotomy. If we go back and look at Apple now, so I can't figure out this market because me, I've loved Apple forever, and now I'm kind of becoming a hater. Because it's boring. I don't want to own a $3 trillion. There's no alpha in owning Apple. There's just market beta. at this point, right? Global market beta, right? Like if China does something crazy or the president here does something crazy, or the supply chain gets screwed up or they miss an iPhone number, we're all going down. Right? They're the last man standing. Look at Google even rolling over here because of ads, right?
Yeah.
So I look at Apple and I'm like, who's it helping at this point? Like, I get it. Like, we love Apple, great products. But like, if we look at Snapchat, let's pull up Snap. Their business is killed because of the changes. Look where it was before Apple changed the privacy. And I say privacy because like all we're doing is passing potential hatred of Facebook to Apple with our data. They're not like, it's not any more secure than any other product. They just have trust. And we look at Facebook, see what they've done since Apple changed, back there in 2021. And then we go look at Twitter, which is only being held up by Elon's bid. So that stock will be in the 20s without Elon's bid. So you look at all the ad-based platforms, and as much as we hated them, we were left with Apple. And that's fine from a consumer standpoint, but like from an innovation standpoint, not good. And that's why we're so delayed in Web3, because Apple and Google don't have to get involved until there's a major reason to get involved. Like to get involved for 100 million wallets or even, is not worth their time. So everything's being delayed because of it. And we may not like Snap and we may not like Facebook, but like we're just passing off our potential hatred. We're kicking the data can down the road with Apple. Then I look at TikTok, which we can't really pull up here. But between TikTok and Apple, we basically have a monopoly on kids, on the pipeline of your smartphone and on your attention. And, I'm not worried about the Netflix of the world because TikTok's actually an innovation in people's attention, meaning like, Netflix has got to solve that on their own. It's not just about the social media. If kids are used to watching 30-second clips, Netflix is going to suffer whether Apple is great or not. So Apple's Netflix a big boy, and Spotify same thing. As much as I love Spotify and kind of hate Apple as it relates to Spotify because they're not getting a fair shake, having to go through Apple's pipes. Spotify will figure this out. But I really worry about the innovation because if you just look at what Apple's done compared to the rest of the software industry, it's a disaster. And this has more to do with Apple's, stranglehold over tech. So in a world where Warren Buffett kind of sees this ahead of everybody else, and it's just basically that's his proxy for tech. And I said that years ago, like you might as well just own Google. It's kind of like an ETF for tech. But it's more an ETF for software than it is for hardware. So if you own Google and Apple, you basically have, a global tech ETF. And that's what Warren Buffett, has done. So from my standpoint, that's tough because that just brings down valuations. And that could be, I don't see what turns that around. So yeah, so like you said, Fed this week, the only stocks that look interesting are McDonald's, which I don't own anymore, and H&R Block, I think looked interesting. But again, when am I going to buy it? But that's been a hell of a run. Was there news or something there, Ivan?
No news. I guess just valuation play. Some people think it was, P of 5 compared to, I guess, Intuit.
Yes,
cheap.
So I'm saying there are a few stocks.
Yeah, but only a few. Definitely, there are a few.
Yeah,
right?
a few.
Yeah.
And by the way, the McDonald's there, I do love McDonald's. I just don't want to own the last company standing here.
Yeah, if McDonald's is your leader, we have issues. I mean, you want to see high growth stocks in interesting industries leading, not consumer staples.
Nothing. You're seeing I haven't followed it close enough. I don't see any real sectors leading. I think healthcare is trying to bottom. XLV is trying to bottom.
Healthcare definitely, biotech holding better than the rest, and there's some interesting setups in healthcare. So Swave, as you can see, failed breakout, but every dip to the 20-day is, it works. So it's just a market where it's better to buy light weakness and then sell on strength, not really chase breakouts because
no
breakouts are failing.
Yeah.
So very few stocks are really near 52-week highs or setting up right now. So
Yeah, and
the market
the
needs more time.
economy, where's FedEx? Like the airlines are in the shitter. They can't get employees. Flights are being canceled. And it's not just the strong US dollar. That is a major thing. We need the dollar to roll over. I mean, correlation wise, weak dollar has helped the market. So it's again, like maybe it peaked out there and we get this a continuation of this rally off the lows here. But and valuations have definitely come down. So it's like the market, like the rate hikes are doing their thing on valuations. They may not be helping the economy, but they're doing their thing on valuations. And, I'm at the age where I kind of just wish people were happier and the economy was going better versus my stock portfolio. But 1 year T-bills, Ivan, I can't even believe I'm saying this because I bought some this week, but 3.25% for T-bill 1 year. Like, I mean, I'm sorry, like that's how negative I am, is that I locked in some 1 year at 3.25%. So I hope I'm completely wrong and rates, if rates plummet from here, that was a nice little park of some cash, but and that'll help the market. So I really want the markets to work, but I don't know why they would work here, because it feels like no one's leading. That's about, there's nothing leading the market except, Apple. And again, I love Apple, but it's basically the iPhone. And I do think they're vulnerable. I do think the iPhone at some point becomes vulnerable. I think China will do something. And I think, the rest of the world uses Android. So they're not impenetrable, but it's just too strong relative to the rest of tech. And that worries me. It just won't work forever. Something will break. So I'm really kind of eyeing Apple more than anything. Are you mostly just cash and looking at short ideas and long ideas?
I mean, I'm taking some swings, as I said, mostly intraday or up to 2 to 3 days. So really short-term trades. As I said, in some of the market leaders, LNTH, Swave, just short-term and mostly in cash overnight. So yeah, I mean, nothing has really changed. The same approach. I don't really see a reason to increase my exposure overnight or just hold for longer. It's just a hit and run.
Yeah, and seasonally, August is generally a shitty month.
Yeah, seasonally, yeah.
Yeah, because they kind of front run. It used to be September, October, and they've kind of front run it the last 10, 15 years. So like August has been horrific as a month. Again, that means nothing. That's just data. No. But the mood does drive a lot of this, and it just feels heavy. Like it just feels like the slightest thing will just take us back to the low. And Google really makes me, the two that really make me nervous are Google, because it just did not rally with the rest of the market. So it's right back at its lows, right? And we know ads are going to be soft. I can tell you from StockTwits, Twitter announced that they're blaming it on Elon, but their numbers are soft. Facebook's back at its lows. So you got Facebook and Google back at the lows. Silicon Valley Bank, really important, right? It gets a proxy. It's a high beta proxy for the Nasdaq as a bank, but look, that took out the low. Yeah. I mean, that is not good. That is kind of like a high beta Nasdaq play, and the 1% bank. They're kind of a 1% bank, and look at that. That just down 70. So people are like getting a little complacent. It feels like that did not rally. And if I look at that and I look at Google, people are a little complacent about this Apple that it's holding in. And I'm like, I'm not saying Apple won't continue to hold in, but like that can't be the only thing. And again, compared to most countries, Apple's bigger than the GDP of most companies. You know what I'm saying? So it is its own, hemisphere, but it's not where you're going to get true beta from. So this is a big week, Google. But I think what was the other bank I was going to look at? Was First Republic. I don't know the symbol, but that's a 1% bank, like another high net worth bank.
Mm-hmm. Let me see.
Let's see, First Republic. I'm just seeing if it's as bad as Silicon Valley Bank.
There you go.
It's not as much exposed.
Oh, it's looking better, especially the
a
past
little
month.
better, but you
Yeah.
understand Silicon Valley Bank was starting to perk up and then whoosh,
Oh yeah, definitely
a
got
wipe
was
out.
slash. Yeah.
So again, like, I just, you got these downward sloping 200-day moving averages looming,
Yeah.
and strong dollar, rising rates. That just, people should be careful.
Yeah, the strong dollar is a big headwind for all the multinationals, and this is why Microsoft warned a couple of weeks ago that the earnings are going to get hit because of the strong dollar. I mean, the same is true for Apple and Google and anyone else. That
Apple kind of warned. They came out and said that they're
Yeah.
not going to hire, and that's basically their margin, right? They spend it on smart people, so they're going to cut back.
Yeah,
So in a way, it's their way. And then Musk, I mean, he sold so much stock during the last 6 months to a year under the guise of buying Twitter and fighting with the government, but really smartly used all this as cover to sell a lot of stock after like.
well, he has a lot of kids to support, Howard, so he needs the money.
You don't need to sink that low. That's generally for me. You're the nice Bulgarian. So anyways, I think people should have I think they should stand on the sidelines. There's nothing, you're not gonna, the only thing they're gonna miss this week is a lot of like volatility with earnings moves. And I have no edge. In fact, you're saying you have no edge right here. You don't know which way you're gonna swing.
I mean, I wouldn't say I don't have an edge. It's mostly intraday and short-term trading, as I said, and this is what I'm doing right now.
Okay, you do that full time. Very few people have the ability to do that full time.
Yeah, that's true. Yeah.
Okay, buddy. Well, I hope things look a little clearer next week, but I think it's going to be a tough August. And if it isn't a tough August, I think it's going to be a really tough fall.
I mean, that's good news. Like, it's better to really get.
Listen, I'm in a position, like I said, where T-bills
Yeah.
like 3.25%, munis look good. So again,
Yeah.
I prefer other people. I want the market to go up for other people, not so much myself. What I am worried about is this app. As someone who's a VC and like funds startups, I don't want to fund anything that's relying on an Apple Store or Facebook ads. You understand? So it's really changing the way.
So what are you funding right now?
Like I said, it continues to be very little activity for us in the last 18 months because we believe paying Apple and paying Facebook with cute for the first 10 years, it's not fun anymore. It's too expensive. It's not reliable. There's too much competition for those eyeballs. I have no edge. I think Apple, TikTok, the big guys are taking away all the edge. And this bear market is only going to make these companies stronger. So valuation aside, Netflix down 70%, they're not really in trouble, because the market's going to clean up and move people away from them. And they probably had too many people on, you know what I'm saying? Like, it's going to clean up a lot. But I worry about like the Snaps and the Facebooks and not worry like they're going to be in trouble, but like the people that work really hard there, are 5 years treading water now in stock prices. So there's going to be a lot of people moving around, which again will displace people around the country. This is the last push from people. More people will leave San Francisco and the coast and change their lifestyle. So there's some trends that will be good.
Yeah, I mean, that's a good thing. As
there's some trend, like there's just new trends that are going to develop, but we're not there yet. And we can't just keep, like I said, it was fun owning Apple on the rise, the last 15 years, but now it's just become like, it's just too big and, they're just too powerful. And I'm not talking about global, I'm just talking about in the US, it's hurting innovation. And they can afford to pay people endless amounts of money, and the stocks, they are going to get stronger through this bear market. And I don't like what that looks like.
Of course they will. I mean, all of them are already saying that they're, stopping hiring, they're slashing costs. So a couple of quarters from now, they'll be much stronger. The balance sheet will be much stronger. So
yeah. So again, I'm just watching for something to change. And you and I talk about this every week, but it's now been almost a year where I just can't really find, trends that like, yes, I miss the energy trend, but I also, it was 10 years of nothing before that moved. So,
Well, there'll be new trends eventually.
yeah.
So
Yeah, I
You
just
just need
don't
to be
have a
patient.
sense of what it is. Like the number one trend that hasn't, that's really held the most is that people are working from home. So traffic is lighter on the freeways. I've noticed it in San Diego. It's still heavy, but it's much lighter than pre-COVID.
yeah,
So, and then I look at WeWork and that's, you know, a tell, but it can't, it's, I think the simplest way, but it's still a broken company. But people are, you know, commercial real estate is changing. So, but I don't see the other big trends that are coming from that yet. Anyways, have a great week, everybody. Ivan, have a great week.
all right, you too, Howard. See you next week.
Everybody.